So Alan, I know that a lot of expats, they go overseas and they've heard that they can actually pay less taxes than they pay in the US sometimes. And that's about the Foreign Earned Income Exclusion. That's one way that they can do that. Tell me a little bit about that exclusion.
Oh, the Foreign Earned Income Exclusion is one of the amazing benefits of being an expat. You basically have to be living overseas or you have to spend a significant time over there, and then you're allowed to exclude quite a bit of your salary from being taxed, and that's per person. Basically, you add your income onto the tax return and then you subtract it out. So we find that a lot of our clients at Greenback don't wind up paying any income tax at all because of the Foreign Earned Income Exclusion. When you file your tax return, Form 1040, you need to include Form 2555 in order to claim the Foreign Earned Income Exclusion.
So how does someone qualify for the Foreign Earned Income Exclusion? I imagine if I take a trip overseas for a couple of weeks, I can't just waive a bunch of my income taxes.
Oh, that's true. So it's not when you're overseas temporarily. You have to be over there on a permanent basis. Now, there are two very specific tests to qualify. So the first test is called the physical presence test. You have to be in a foreign country for 330 days or more in a rolling 12-month period. In essence, that means you can't be in the United States for more than 35 days. So that's a very strict black or white day count test. Now, the other method is called the bona fide residence test. Okay, so that one, you basically have to be living overseas with the intent to stay indefinitely or permanently. To pass this test, you have to be there for a calendar year. So that's from a January 1st to a December 31st. You might have to file some special extensions in order to file your tax returns, and that's on Form 2350, and we can help you with that. You definitely should seek some help from a professional if you do need a special extension, because you might not be able to file your tax return for literally for 2 years, depending on when you actually moved overseas and are claiming the bona fide residence test. But when it does come to the Foreign Earned Income Exclusion, if you're overseas with your spouse, you get your own limit, and your spouse also gets another limit. So it can save a significant amount of money.